Good evening, guys. It is Wednesday, May 14th, 2025. This Bathrobe business. I'm Georgi Oganov. I got my decaf coffee and I got the news. Another major day. Trump has got a second day of victories. He is kind of killing it right now. I don't see how you can read this any other way. Trump is announcing a new deal between Boeing and Qatar. What's always interesting about the Trump administration is that he is actively pursuing deals. He is in there as almost like a broker or facilitator in a way that no other president is. It's definitely a style unique to his own. As I've said before, I'm kind of agnostic on Trump. I don't hate him. I don't love him. But this, I think, is quite admirable in the fact that he is so upfront in making deals. Now, you could make arguments that it's not the best thing for the United States to get involved in private deals, kind of the libertarian argument. I'm totally fine with that argument. I agree. It's just he takes an approach that's very different from other presidents, not just domestically, but internationally. He does, in a lot of ways, take the same approach that China does. Remember, China is it actually sets production and GDP goals for within the CCP every single year, and it strives to meet them. A lot of people say those are actually dishonest; they never actually hit them, perhaps. But as a structure of their economy, as a structure of their government, they have actual production and GDP goals that they set, and whether or not they meet them, they strive to achieve them. And in fact, I'm going to share a chart with you guys in a few minutes that shows I don't think they're faking as much as people would like to think. Uh, in fact, actually, let me jump to that chart right now. I don't know why I'm withholding it. I'll jump into the Trump deal in a second, but let me jump to this story real quick. This is a story on EV sales. So EVs are going to hit a new global milestone this year as a quarter of all global car sales are going to be electric vehicles. What is most interesting about this chart goes back to 2021, just 4 years ago. Look where China was as a percentage of global EV sales. 4 years later, look where it is now. And in fact, it hit an all-time high in 2024. It's actually down a little bit because the EV market is deflated. But just look at those numbers. Like that's astronomical. In 3 years, they went from being maybe at best a quarter of the market, you could say half the market, to completely dominating the market. The growth in this chart isn't from the United States. In fact, let me blow it up fully so you guys can see this for those of you that are actually watching. So the growth in EV sales incrementally increased within the United States, incrementally increased in Europe, in the rest of the world as well, all those third-party manufacturers. But China is what's driven this production up astronomically. And that's within 4 years. So you could say that China fakes their production numbers, but you can't fake stuff like this because it's verifiable internationally. You see these cars on the road, they're imported, they're sold. These numbers are real, and that's what China does. And Trump takes a very similar approach of let's go out, let's do business, let's make money. From that standpoint, I don't think anyone else in the world except him and the CCP are doing it. And I think it's to be applauded. I think it's a fantastic move. He's doing great things. I know there's some controversy right now with him, Qatar, and Air Force One. That's more political. I'm not going to get into it. But from a business standpoint, I think it's amazing. Now, let's jump into the story that I was going to start with, and that is what happened today with Qatar and Boeing. So, essentially, Qatar has saved Boeing from going into bankruptcy. I mean, I personally, if I was Qatar, I would not be buying Boeing planes. I don't trust them worth shit. But hey, it's their money, it's their dollar. They can do whatever they want. So Qatar Airways is going to be buying up 210 Boeing 777s. It's going to be the 787 Dreamliner, the 77X, the 77. It's the 7779. There's all sorts of variations I never even heard of. But in a major move, they're going to be buying these up from the United States, as well as GE Aerospace. They're going to be buying up another 400 engines. This was a deal that was brokered by the Trump administration. He is still there in the Middle East. He was in Saudi Arabia yesterday. He's in Qatar today. And this is a deal that is kind of expanding Boeing into those regions. Now, oftentimes there are major manufacturing lags. Like Boeing has lots of standing orders from years ago they still haven't filled, and actually Airbus is similar in that capacity. Oftentimes these orders are several years out, but still a positive sign. It still underpins American manufacturing, and it's still a fantastic deal. Not much else to that story other than it's the second day in a row of just nonstop deals within the Middle East. And again, from a political standpoint, it just shows how much stronger Trump is gaining in the Middle East than any president before, and how he is kind of sidestepping Israel. I'm not going to get into the politics of it, but it is very interesting. It is also interesting in the fact that recently Trump did a speech in which he kind of threw neocons under the bus, as he should. But he essentially said, we've brought more peace and stability to the Middle East through deal making and making money than war and invasions and all the casualties that come with it. So this is kind of Trump's way of dictating foreign policy, is to do business. So next story. This one is very interesting. So CoreWeave, this is a company we've covered a few times on this channel. Yeah, they build AI infrastructure for many of the companies you already know and love, OpenAI, NVIDIA, etc., many others. They actually had a fantastic quarter. So if you remember, during their IPO, they kind of plummeted. It was in that kind of dark time of tariff uncertainty and shrinking economy from just like a couple of weeks ago. And when they debuted, when their IPO happened, their stock plummeted. And in fact, when it did debut, it was priced at a lower rate than most people thought. Well, they're actually having monstrous growth. Their revenue increased 420% year over year from a year earlier. Oh, sorry. But now, as a lot of these startups are, it's not yet profitable. So it did have a loss of $1.49 per share, but its earnings were $981.6 million versus $853 million. So a drastic increase in the number of revenue. Its stock soared its revenue soared 420% in the first quarter alone, which ended March 31st. So this was one of the first stocks that kind of set off the shrink in tech. I remember covering it and treating it as a barometer, saying, oh, I think we're seeing choppy waters ahead for the tech sector. And sure enough, after that, every single tech company started to plummet. However, now we're seeing more stability into the market. It seems like this is now the canary in the coal mines telling us, no, it's safe to go back in, as it's increasing, and we've seen better numbers coming out of all of the tech companies with the last round of earnings. So I'm not going to tell you that all's fine and rosy, but I do think that this is a little bit of a prognosis that, hey, I think the tech sector is actually gaining more stability than we had originally thought. And I think all the darkness of DeepSeek that was kind of a hovering over the tech sector is starting to dissipate. Next story I'm going to cover is an interesting one because we've covered Starbucks ad nauseum on this channel. I just think it's interesting. I've talked about it for multiple reasons. I think it's kind of one of those examples of the fall of a great company when it grows so quickly it doesn't know how to define itself anymore. I think this is the same thing that happened to Sears back in the day, and to some extent what's happening to Tesla now. In a major pivot, Starbucks is said to be kicking off the process to sell its stake in the sprawling Chinese industry. So essentially, Starbucks is looking to liquidate its Chinese coffee shops. This is kind of a major move. China is their second biggest market. It was one of the things that bolstered them greatly coming out of the Great Recession, was their expansion into China. But they are facing major competition in that sector. So there are two major companies, and I think I've mentioned them before on this channel as well, Luckin Coffee and Coty Coffee, which have emerged in China and are outpacing them almost 2-1. So Starbucks has 7,750 stores in China. They generate about $740 million in net revenue in the country through last quarter. Luckin net revenue was $1.2 billion in the same time period. So again, another example where if China comes in and wants to crush it, they just do. They've done this now with multiple sectors domestically. I know everybody says that China kind of has a problem with consumption, but at the same time, they kind of do kill it with consumption too, because while they don't spend as heavily as the United States, I think part of that is cultural. They also, when they do spend, seem to prefer their own brands to foreign ones. We've seen this now with phones. We've seen this with cars. We see this with coffee shops. We see this in a lot of different sectors. So it's very interesting that Starbucks is looking to pull out of China completely, or at least divest heavily, because it's just not worth the competition to them. I do think that this this is interesting from the standpoint that the new CEO is kind of looking to say, hey, it's better just to kind of bow out gracefully than try to compete and lose more money. It is an interesting strategy. As I've said, I don't have high hopes for the new CEO of Starbucks. I had a whole video on that of, I think once a company is having these kinds of issues, it's very, very hard to turn around. I don't think he'll be able to, but I think this is an interesting strategy to take. Sometimes it's better to cut your losses. That's kind of the moral of the video today as far as business ownership. Last story I want to cover, my favorite subject, gold. Major hedge fund is talking about how they're investing in gold. So I am not familiar, and let me make sure I'm displaying my screen. Yeah, I am. So I'm not familiar with this hedge fund, but I don't follow hedge funds all that much. Greenlight Capital hedge fund manager David Ihorn Wednesday said he sees major upside for the yellow metal. As we've talked about on this channel ad nauseum, gold has been fantastic in this last, not even just this last year. We're talking over the last 5 years. Look at where gold was at the time of the of the COVID lockdowns. It was down at 1,700. Now it's up to 3,200. There's been a bit of a regress in the last couple of days. Use it to your advantage, buy gold. And that's exactly what Ihorn is saying. He makes a fantastic point, a similar point that Paul Tudor Jones made in a video I talked about. It was either the beginning of the year or end of last year, about how one of the major investments for why we're investing in gold is because of U.S. government spending. He talked about how the U.S. financial system is one of the greatest reasons of why you should invest in gold, because it's proven that it just spends. He's even saying it's not even so much about the inflation as it is about the spending. This is his quote directly. Gold is about the confidence in the fiscal policy and the monetary policy. Since we bought gold in 2008 or so, it's been very clear to me that the U.S. Fiscal and monetary policies are both too aggressive and create risk. Ihorn pointed to the meager cost cuts that came from the so-called Department of Government Efficiency relative to the size of the federal government's budget as a sign of the fiscal situation is unlikely to change anytime soon. And he's absolutely right. Doge didn't really do anything. They cut a couple billion here or there, mostly for show. Let's be honest. It didn't really accomplish anything. We are still at a $6 trillion budget. Just to give you some perspective, that's just insane. I mean, obviously, $1 trillion is a lot. But let's not forget, the only reason we came to $1 trillion budget was because of COVID. Up until then, the budget was just $4 trillion, and we had an emergency called COVID-19, and they had to print another $2 billion and grow the federal government's budget by $2 trillion. I'm sorry, I said billion, trillion, by $2 trillion, and it's never come down from there, and it just keeps continuing to rise. And that's exactly what he's saying. He's saying that gold is going to keep edging higher because of how the U.S. government is handling all of its deficit spending. And he even made in this article a great underlying point of gold will fall a little bit, but the government is just kicking the can down the road until the next financial crisis, until gold skyrockets again. That's pretty much what we've talked about on this channel as well. So now, as I've talked about before, hedge funds are looking at gold more and more seriously because they are seeing it as a serious hedge against inflation, where Bitcoin is just seems like it's become antiquated. Nobody is even talking about it anymore. So that's pretty much it. Those are the stories of the day. I hope you guys enjoyed it. I will see you guys back here tomorrow. It will be very interesting because we have the PPI inflation numbers coming out tomorrow. That's the producer price index, or the inflation that happens at the manufacturing level. It'll be interesting to see what happens with producers in the United States in the wake of tariffs. So we'll see you guys back here tomorrow. I hope you have a productive Thursday.